What a move, what a move. Another huge move on the charts today. And we're not done yet. We got one more day coming, some more big news coming tomorrow. Well, I think Reaction Thursday lived up to its name, didn't it, guys? Hope you guys had a fantastic day out there, but it's about that time of day again, isn't it? Time to get back to work. Friday is not going to trade itself, right? Thursday evening, it's May the 5th, Cinco de Mayo, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Friday, not just any Friday, Non-Farm Friday. Got some big jobs reports coming tomorrow morning and helping us finish up what's been an incredible week in our trade room. I have a lot to cover here tonight. Got a bunch of great trades setting up for Non-Farm Friday. We got the oil, we got the Nasdaq, we got the S&P on our radar. Glad to see we got you right here along with us. I have a lot of great trades we're setting up for tomorrow. Got a bunch of ranges. You can definitely tell there's a big news event coming tomorrow morning. Got a bunch of ranges on the charts. We're trading breakouts. We're trading failures. We're trading rotation back and forth. Not to worry. I'm going to cover all my favorite trades in tonight's video, and we have a lot we're going to cover. Before we jump in, though, get this party going here tonight, make sure you subscribe to our YouTube channel. I publish this video with all my best trade ideas every evening on this YouTube channel. So make sure you subscribe, set those notifications, hit that bell icon. That way you don't miss our next video upload. Also, any questions for me? I do go back and personally answer all the questions. Drop those questions for me. If you have them, I'll get caught up on questions later on this afternoon. And if you enjoy the video, if you tune in every evening to get your mind right, get those charts right, if you enjoy this lesson as much as I enjoy making it, do me a favor, hit that like button for me. I appreciate you tuning in tonight, supporting the YouTube channel. But let's get ready for Friday, though, shall we? Time is ticking. Non-Farm Friday. Boy, the big news events just keep on coming, and we've got more of it. We got more coming here for tomorrow. Like I said, there must be a news event tomorrow. There must be something happening tomorrow because range. And if you know me, you know how much we love those ranges, right? We love those range markets. Range markets tell us we're trading rotation. We're trading breakouts. We're trading failed breakouts. And boy, from what I can see tonight, there's going to be no shortage of trades for Non-Farm Friday. Now, speaking of Non-Farm Friday, let's make sure we all get on the same page for tomorrow. Tomorrow is not your average Friday. We get the big employment number coming out at 8:30 Eastern time. Now, I could sit here and we could geek out on all the numbers and, they're expecting this, and if they don't get that, and blah, blah, blah. It doesn't matter, guys. Some of the best advice I can give you regarding the number for tomorrow is don't even look at the number. Don't waste your energy on the number itself. Just be ready for a reaction tomorrow. And by 8:45 tomorrow morning, we are going to know what the market thinks about whatever number it gets. The number itself is irrelevant. I would advise you don't even waste your time by looking at it as a trader. The number is very misleading. It's more complex than just big number, small number. So don't get wrapped up in the number tomorrow. Stay focused. Focus your energy on how does the market react. Now, one of the big things about Non-Farm Friday is the overnight session beforehand. So overnight tonight, be aware things may be a little bit slow. We have what is widely considered the most watched news event of the whole entire month is tomorrow morning. Now, obviously, we had that big number last night too, so it's tough to say which one is more anticipated. I think the FOMC announcement this week was probably more important just because of the magnitude of that rate hike. But typically speaking, though, historically speaking, this is a big number tomorrow. What you want to remember is all of the bigger players in these markets, they can't be floating some big positions going into a big grenade going off potentially tomorrow at 8:30 Eastern time. So things do tend to get a bit thin. They do tend to get a little bit light and a little bit sluggish overnight. Remember, trading is like riding a bicycle. It's much easier when it's moving. And so if it's not moving, don't force it. If it is moving, though, trade it. If you're getting some good price action overnight, then trade it. Don't let tomorrow's news affect it. But if it is slow, just be aware of the reality. You're not going to get as much consistency in your results when the markets are slow. And then give it about 10 minutes afterwards. By 8:40, 8:45, you will know what the market thinks about when it comes to the employment number, and you'll be able to update your charts, find any new ranges, any new trends, and I'm going to give you some good ideas for trades to look for tomorrow as well. Now, you will notice that we must have gone through the FOMC announcement because we now have the Fed speakers back tomorrow. Williams, Kashkari, Boston. I mean, look at this. A whole buffet. They're like lined up after that number comes out tomorrow. I wouldn't expect these. We've been talking a lot. I mentioned this because over the past few weeks, we have talked a lot about watching the Fed speakers because they've been leading up to the FOMC announcement. I doubt you're going to see these markets care too much about these Fed speakers tomorrow, just because they did such a great job yesterday, or yesterday afternoon, at outlining kind of what they were planning on doing at the Fed. So I doubt you're going to see any, you might here and there, but I doubt you're going to see much reaction to the Fed speakers tomorrow like we have been seeing over the past few weeks. And that's just because, again, the FOMC announcement came out yesterday afternoon, and we know kind of what they're expecting, right? We're expecting some more rate hikes, consecutive meetings, 0.5% rate hikes. If you tuned in yesterday, we talked about this. Anyways, the big number for tomorrow, employment number. Be careful overnight. Okay, be careful overnight. And remember, right, trading is like riding a bicycle. If it's slow out there, don't force it right before the news comes out, or even as we get later on in the day on Friday. Trade that good price action. And if you don't know what good price action looks like, if you don't know what I mean when I say too slow, that should be a really good clue that it's time to get registered and come out and join us and trade with us in the trade room. And I'll show you what good price action versus bad price action looks like. Let's go back to our charts here because this is where the money is. We get a big news event coming out tomorrow. S&P, Nasdaq, oil. Now, let's cut to the chase. Whether you trade one of these markets or you trade all of these markets, I'm going to cover my favorite trades on each one of these charts here tonight. I'm going to go right on through my list of my favorite trades. That way you have a roadmap to make some money tomorrow. You'll learn something new on every different chart here. I like to keep it moving. I like to keep some variety going. So different setups, different trade ideas on each market. So whether you trade one or you trade them all, there are going to be ways to get better at trading. There are going to be money-making ideas, new lessons to learn throughout the entire lesson. And you know how I always do it. I try to wrap it all together and save the good stuff, the best stuff, all the way to the end. So make sure you stick around all the way to the end. I'll make it worth your while. Let's jump into the S&P first here. Over on the E-mini, what the heck is going on the S&P? What are the most important factors right now on this S&P 500? I would say there are probably 3, maybe 4 important factors. One, a very, very strong move down, right? Anytime we see a strong move down, we expect what? We expect a pullback and a retest of that low. Why is that important? Well, because at this point now, we're going to have to do something to attract more sellers into this market, and that something will probably be higher prices, right? We've got to get at least up above this, in my opinion, above that high, right? We've got to get some higher prices to attract more sellers into this market. Anytime we see a strong move in one direction, we expect a pullback and a retest of that low. We have already taken out that low. Now, let's give me a reason to sell more. Let's get up around these areas now and give us a better entry price at a higher price. That's one key component on this chart here tonight. The second key component is the trading range. You can pretty clearly see the market goes rolling around inside that trading range. And now we are, let's call it, rotating off of that low. Oftentimes the amount we go below the range is the amount we go above the range. And so it kind of gives me an area where I can start thinking about resistance levels to be a seller. You'll notice that lines up nicely just above those prior swings that I mentioned before. Third clue here is a spike and channel. Spike and channels are one of those chart patterns that every trader really needs to learn. Spike and channels are very important because that big spike down, where that spike down ends up running into the channel, is where you want to pay attention to for some good entries. Right about there. Now, this may be a little bit higher, a little bit lower. It's a general area. But right where that spike down and that channel line intersect is, generally speaking, a really good spot to be looking for, in this case, in a bear market, to be looking for a short. So those three components, you put them together, and as you can see here, we've got a really nice juicy area here up inside that 4180, 4190. You could probably even stretch this as high as that 4200, that big round number, just to be honest with you. Now, there was one more component to this, if you recall. Like I said, maybe 4 components, and you'll notice we're back at last week's close. Now, why is this significant? Why do I mention this? Well, because if you've been watching this video newsletter every week over the past few months, you probably have noticed we do this a lot, where by Thursday or Friday, we're right back to last week's closing price. That is where last Friday's market closed, right? That was at 5 p.m. Eastern time or whatever time it closes, right? Last Friday. And so think of all the wildness we've seen this week and look where we are. Now, why is that significant? Well, because it's very common for us to open one week and close, open one week and close, back in the same area. So that's kind of like a magnet that we can use here. And you can see it lines up right inside the middle of that range, and ranges always act like magnets as well. So 4 basic components here on it. So what can we do on this? Well, sellers have controlled momentum right now. Sellers, of course, would love to sell up around some highs up here. Okay, if the buyers can hold some breakouts, they can trade a breakout going higher, reversal going higher here. I would normally say that's probably not going to happen, but after seeing this and then seeing that, right? I mean, come on, would it totally surprise us if we ended up all the way back at these highs? Of course not, right? Not if you're watching the last 24 hours. So would it be? Is it likely? Is it likely that we go all the way back up again? Yeah, probably not likely, but is it possible? I would say anything is possible in these markets these days. So buyers, of course, can look for that reversal. We'll talk about how to trade these here in a second, guys. Don't worry. And then, of course, as we go lower here, buyers can come in and buy that double bottom reversal. We saw a beautiful double bottom reversal earlier on. We'll talk about that here in a moment. And then sellers can definitely trade a breakout going lower. Now, you'll notice there is some major support levels down here. So there's really one type of breakout pattern I have on my radar here. Well, maybe 2 breakout patterns on my radar as we go lower. This is a very big, this area right here is one of the key differences between the S&P and the Nasdaq for tomorrow, and you'll see how it all comes together here as we go deeper into this video lesson. So how do we trade this stuff? Well, as the market pulls back, we begin to what's called rotate off the low, okay? So basically the market is now rotating off the low of this trading range. That rotation tends to put a little bit of a pop to that move higher. And so as we go higher here, what you want to be thinking about on the sell side for this is to use one of my favorite combinations, and that is that 2-try failure into that first test channel. It'll look like this. We get up into those areas of resistance up overhead. The buyers, of course, now come in and they think this is a reversal. It's not a reversal yet. We'll talk about that in a moment. Now, once those buyers try a couple times, I like to see them try twice personally, right? I like to get them like back here, right? Get it up, let them try once, let them try twice, and then sell it back down again, right? So looking for those buyers to try twice up here. Why twice? Because now all of those stop losses, all of their stops are sitting right below that low. Or as we always say, right? All their pain points now are sitting right there. We're in a great place to sell. We're at a level of resistance, above a range, up in the base of that channel, pendulum swing taken out, fresh sellers above those highs here, and we can look for a nice juicy signal and we can sell off of that high. Now remember, your job isn't done at this point, right? Now, where's the market want to go? It wants to go back down to retest those lows again. And so at this point now, we're not done yet. Now we go out and we grab that channel off the low. We've got a trend line off the low. We find a channel off the high, and then we look left. And as you guys probably have seen me do many times before, right, I like to find that little trap, that little prior swing here, and that becomes one of my favorite entries off the high of that channel. Now I say trap. Traps are my favorite, but a lot of times these will be failure setups or pullback combination setups. Oh, and by the way, I know most of you guys and gals have taken the free trading course. You've learned learned all of these setups, and I've had so many great emails and comments come in about how you've used that strategy to make money on your own account. It really is inspiring for me. But if you're here for the first time today, or maybe you haven't taken that free class yet and learned all the setups, all the rules, what I'll do is I'll put a little link up here for you. We have a great free trading course on the website. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you're looking for a roadmap to go from a full-time job to a full-time trader, that roadmap is all wrapped together in that free trading course on the website. You'll learn the whole entire strategy there, all the setups, all the rules. That way, next time I say to try failure into first channel test, you'll know exactly what I'm talking about. You'll know where to look for it, which ones to take, which ones to skip. So definitely grab that link that popped up there in the upper right-hand corner. Now, I know what you're thinking. At what point does this move higher turn into a reversal? There are two basic reversals you want to look for in this, and we actually saw both of those early in the day today on the S&P. One of them would be we pop up, we pull back. Now, instead of the buyers trying and failing, now those buyers pull back and they jump, right? The key is the jump away from the moving average. When those buyers jump, now we go in, well, now we are a bull market. Now we have a bull reversal, a bull breakout. I'm going to mark a trend line off that high. I'm going to find that channel off that low. I'm going to drill down to my faster time frame. This is a 10,000 tick chart. Why 10,000 today? Because the volume was very high today. And so if I use the same time frame as yesterday, there'd be too many candles to analyze. High volume markets, I talk about this a lot in that free trading course. And of course, in our trade room, we talk about why we're making certain changes. Anyways, I want to grab that first test. Now again, this could be a trap setup. This could be a failure setup off of the moving average or a pullback combination. Now, where is the target on this going to be? Well, the big target is back to retest today's high, but the more fine-tuned target is first leg and third leg. First leg and third leg. Okay, so if we end up breaking out higher, measure that first leg, that'll give you an idea of where that next target is going to be. We saw one of those early in the session this morning. What's another one? How else could this market reverse? Well, maybe it pops up and now it begins to grind and grind and grind. Once it grinds like that, okay, anytime we see a grinder like that, we draw a nice tight channel. We find that nice little bit larger channel, nice tight trend line, find that little bit larger channel, look left and grab that again, first test off of that low, right? First leg, third leg is going to be, right, is going to be the objective on that, right? So keep that in mind as we go. And I won't go into details. I'm not going to go over the move down here. The video's long enough already. We talked about today already. So we know that's how the market's going to reverse as we go higher here. Now, as we go lower, first of all, stay out of the middle, right? Stay out of that middle. As we go lower here, okay, how do I buy it? How do I buy it? Why don't we talk about the long side on the NASDAQ? Let's talk about the breakout going lower. Okay, the breakout going lower. I'm going to talk about the buy side on the NASDAQ in a second, and you'll see why I choose the NASDAQ here in a moment. All right, you'll see why in a second. How do we trade a breakout? So the breakout, we're definitely very bearish right now. There's no reason why this market can't break out and go lower. The one thing you want to keep in mind, though, is where we are. There's a very big, literally a sore thumb low down there at 40.56, right? The zone down there. So this is, again, it's one of the big differences between the S&P and the NASDAQ. What you want to think about when it comes to a breakout regarding the S&P, there are two breakouts I would look for. One would be what we call a two-try trap. Now, don't get me wrong, if we take out that low and we get that, the moving average coming over and the bears hold and they can jump off that moving average like that, as long as I can get that first test off the high of that channel, that's gravy. Okay, that's great. Okay, as long as I can get that 1, 2, 3 breakout like that and get that first test, that's great. That's fine. I just don't want to take that short trade right into that low. Just be aware, right? Just be aware of that, right? So they have to get down. They can't fail like that. Okay, they can't fail like that. They got to hold it. And they get a jump. Now, another one, again, a couple more you want to think about is going to be, if I had to guess tomorrow, I would guess the breakouts that would make the most of my money tomorrow. One would be a 2-try breakout. So strong move down, right? Strong move down, shallow pullback, lower low in price, and a trap setup, right? Strong move down, lower low, and a trap. These are great setups. These are fantastic setups. Pretty much any time we see a strong move, a shallow pullback, a lower low in price, you're almost always going to see a lot of bears looking to sell above that trap. That's the same idea. Okay, so if we get that real strong move down, remember the issue here is we have a lot of support down there. It's a major, major low. So traps are just by definition a very good way to trade a breakout. Strong move down, shallow pullback, lower low in price. Everybody wants that short right there. Everybody wants it. Now, another thing you want to think about is what I call a pop and a pullback. And this is very useful whenever we have an open space, but not that big space. So, for example, let's say, for example, we do take out that low. Let's say, for example, now the bears do come in and they run right into that low here. Okay, now at this point, we know that people who sold off that pullback will take some profit down here. This is where you do is you widen out that channel. You anticipate that pop and that pullback. Again, think about profit taking off of that low. It's a very strong move in that situation. It's just, again, we're running right into support. I'm not going to buy that thing, right? It's too bearish to just to buy into it. So I'll wait for that pullback and then try to trap in. And when I say trap in, I want to get above that moving average. I want to look for those buyers to come in and try to buy it because they will. Right? Once we get above the moving average in a bear market, you will see buyers come in and try to buy it. You can sell right into their stop loss. It's one of the most fun ways to make money in a bear trending market. Again, in this situation, it's a strong move lower into major support. Okay? Expect to see some profit taking there, and then that bounce. That bounce is not a reversal. It just frees up the space you need to rope in those buyers who think it's a reversal and sell right into those stop losses for a retest of that low. Make sense? Okay, so watch out for that pop and pullback, or maybe you call it a breakout pullback. That breakout into that pullback, widen out that channel a little bit, and then find those buyers getting caught looking, right? Those buyers getting caught trying to buy that reversal. One of my favorites as we go lower here. And again, this is great whenever we have a situation where there's an open space, but it's not a huge open space. All right, let's keep going. I got some more I want to cover here on the NASDAQ. NASDAQ, of course, is very similar to the S&P 500. First of all, what's going on the NQ? We have a very strong move down. Anytime we see a strong move in one direction, we expect a retest of that low. Now, at this point now, we have to get some higher prices up here to be able to sweeten the deal. You know, if you want me to sell some more, you got to give me a better price. Or you have to give me some new information that causes me to think I should be selling at a lower price. What could that new information be? Oh, maybe a jobs number tomorrow? Right? So tomorrow morning, news comes out tomorrow. The news is horrible. Everyone's, I don't know. Again, scenarios can come up where this situation changes. We hear some news that comes out, and all of a sudden, the opinion of this value of this market changes. And so right now, all things equal, unless we get some new information or we get some higher prices, that's the only way we're going to be able to attract more bears, right, into this market. So we'd like to get that price going higher here. We, of course, have the range. Ranges are magnets. Ranges love to rotate. They rotate off that low, and they like to go make that run back higher. This, of course, becomes a great area of resistance overhead. And then, of course, the third piece of this is that spike and channel. Spike and channel where that spike runs into the channel. Again, give or take a little bit here and there. That is generally where you want to be looking for those entries. Fourth, of course, is this last week's close. Remember, the last week's close is irrelevant until really Thursday, Friday. So here we are Friday, and we're staring right down the barrel of the closing price from, well, almost 7 days ago. So we've got a weekly close there. That will act as a magnet as we go as well. A lot of this is going to be very, very similar. We talked about the pop-up, the 1, the 2, the failure, and the move lower. Find that new channel. Hit that first test, because that's the best test. We talked about that already. We talked about if this market pops up and if they hold that pullback and they what? And they jump. Do they try? No, don't try, right? Jump. They have to rip this thing out of the hands of those bears. Okay? If they can do that, now we draw that new channel. We drill down. Obviously, I'm simplifying this right now for length of it, right? But that could be a trap. That could be a failure. It could be a pullback setup. You're going to learn those setups inside the free course. Or maybe it's a short squeeze. Maybe it pops and doesn't pull back and jump. It pops and grinds. Pops and grinds, right? When you get those pop and grinds, you draw that channel tight off the high. Find that hidden channel off the big low. Mark up those prior swings. Grab that trap. Trap in those bears below the moving average, right? Get that failure into that pullback. Remember we talked about this? First leg, third leg. And again, we have an idea of where the market wants to go at that point. It'll want to go all the way back up to that moonshot back up at those highs. Again, if I hadn't seen that big up and down today, I would say it's probably not going to happen, but I'll bite my tongue. I'll bite my tongue on that, because who knows, right? Especially if that number comes out, something gets the market going tomorrow. Who knows what can happen overnight? Anything can change. And again, the minute we get more information, these markets can do whatever they want, right? We're simply planning our trades. That way, if we see this stuff set up tomorrow, we know we can take action on it with confidence. Now, as we go higher, selling off the high, right? How do we buy off the low? How do we buy off the low? And what's up with this breakout going lower? Because you'll notice there's a whole lot more open space down below us on the Nasdaq. So Nasdaq is actually sitting right on that big low. Okay, so again, big difference here between the S&P and the Nasdaq. The S&P has space to go. Nasdaq not so much. So we have that, again, we have that big move down. We've retested. And then you see what happens here when a market makes a retest of a low. Notice how it'll go 1, 2, and then back up. This is very, very common. If you're on a faster time frame, actually, this is a 6,000 tick chart. If you were to drill down to like a 1,000 tick chart, you'll see this thing. It'll go 1, 2, and then back up from there. That's the entry that you would use. Again, it's what we call like a double bottom reversal, right? So same thing over here. We've got this, right, relatively strong move down. I would like to be a buyer off of that low. How does that work? We take out that low, obviously. And remember, this is not a bull market. We might be sitting at some major lows, but it's still a bear market. And so we have to respect those bears. And so what do you do in this situation? You give them the benefit of the doubt. Well, what you do is you let them struggle a little bit. You let those bears try once. You let them try twice. And if you're lucky, you'll get a trap low on this, right? A little trap low for what we call, right? Again, if you were to zoom in on this area right here, right? It goes up. Bears once, bears twice. There's a little trap right there, right? That's where the good stuff is. That trap, that's where a great reversal is going to be on this. Now, we're going to have that trend line coming down overhead. Okay, so think about that trend line now coming down overhead here. What you want to do now is now go out, find that new channel as we go, and then grab that first pullback off that new channel. And really, you want to try to use that trend line if possible as your entry level or something as support on that trade. Just be aware you don't want to be buying into that trend line on that channel. That'd be one thing to kind of keep in mind here as we go. So again, as we go lower, rope in those bears. Again, let those bears try a couple times, right? Let them wrap that noose right around their neck. Once they try twice, where are their stops? Where's their pain? Use their stops as fuel to fuel the move going back up in the opposite direction. Remember, if we don't have momentum to work with, because again, we're in a bear market, if we don't have momentum to work with, we need something else to propel this market for us, and that's where running stops comes involved. That's where hitting those pain points comes involved. The easiest money you're going to make in these markets is when you're getting, for example, long and sellers are caught on the wrong side of that market. They have nowhere to go, right? They're going to buy their way out. Buyers are buying, sellers are buying. The market has no place to go but up. And then again, we'll drill down, we'll find our entry off that new channel, trap, failure, pullback combo, maybe a strength move going higher. Where would the market want to go at that point? Yeah, well, first of all, it'll be looking to take out some of these highs, that's for sure, and ideally get a big pendulum swing back in the opposite direction, right? Now imagine we go down, we bounce off that low, we go all the way up. What do? You buy up here? No, right? 1, 2, back down in again. Okay, that's why I said before, ranges love to rotate. They'll go down, they'll go up, they'll go down, they'll go up. And again, if we bounce off that low and we hold it and we blast, what's that? That's a reversal, right? That's a breakout. That's one of those 1, 2, 3 breakouts, or a pop and grind breakout, or a 2-try breakout. We've talked about a couple of those already. Now, as we go lower, so now, right, here's a scenario. We take out those lows. Okay, now the bears come in and they go, you know what? We're not messing around this time. Okay, we're not going to try twice and fail. We're going to hold this sucker and we're going to blast right to that low. Now what do? Yeah, you mark off that low. You mark off that high. Find that channel. Drill down. Grab that first test off the high. And remember, first leg, okay, third leg. That makes it pretty easy to figure out where to leave your runner targets. Take the 1-to-1, stop the first target, trail that stop. You're going to learn this stuff in that free trading class that I mentioned before. One, right? Again, first leg, third leg. We have a pretty good idea of where the market wants to go. 12,420. This is I want to say it's a low from 18 months ago. I want to say, no, a high. I believe that is September 2020's high. If you know, a little blast in the past there, right? Like that's a long time ago. It's 2022 right now. So I realize it's late 20, right? But be aware, it's an old level there, old high, a very big magnet there. Okay. I would also think too that because of the situation tomorrow, where there's a big news event tomorrow, one of those pop. Let's get rid of this channel here for a second. I would imagine one of those pop and grinds would be very possible. Remember, once it starts to grind down. It's kind of a giveaway. It's kind of a giveaway, right? It's kind of a runaway market. Now we're just going to grab that low. We're going to anchor that big top. Now, keep in mind there's always variations of this, and my biggest challenge in these videos is to keep the video as short as I can, while going into as much detail as I can to give you the ammunition you need to make money tomorrow. There are going to be some variations of this, but the simplest way to think about it is draw that trend line right on down those lows, find some bigger anchor. You're not drawing the channel like this. All right, that's not how you're drawing it, right? You're drawing it up off some bigger anchor here, and what that does is it allows you to get a deeper pullback. And when it pulls back, it fools people because it gets above the moving average. And again, when you've got these real strong moves down like this, okay, and then eventually it pops off that low, you're going to have like what I did when I was a new trader. When I was a new trader, I'd be like, oh, there's some weekly pivot down here. It's gone too far. Let's buy it. Like I would make up foolish ideas of like justifying why I should buy these things, and it doesn't work. It just doesn't work. That momentum is so strong. I don't care if the weekly pivot is right there. Are you kidding me? Anytime we see a strong move down, let those buyers sort of buy into it and hit them right where it hurts, right? It's a really easy way to think about it, right? I don't care what support level is right there, right? It's like that pop and a pullback, right? It's like that. Give me that pop down, wait for the pop, and sell it back down again. Does that make sense? Right? Is that a light bulb? Any light bulbs going off from that? Let me know in the comments section. Let me know what's the most important part of this that really helps you. Give me some feedback in the comment section. What part of these videos is the most helpful for you? Because I want to do more of that next time. Let me know in the comment section below. So again, pop and grind as we go. All right, keep an eye on that. And again, we mentioned the strong move down, right? If it collapses, strong move down, shallow pullback, lower low in price. Again, there's money to make on that trap. That's an easy money trade. Easy money trade. Again, we see them all the time. Anytime you see strong move, shallow pullback, lower low, hit that trap, right? It's an easy money trade. It's a very, very reliable trade. My only complaint is we don't see them as often as we could, right? So definitely grab that as we go here. All right, we covered the buy side, covered the short side. Remember, stay out of the middle of this range. Be careful in the middle here. Let's wrap things up here on the black gold, the Texas tea, the crude oil futures. Well, oil had a wild, wild ride today. I mentioned last night we've been kind of reacting to a series of updates out of Ukraine and the banning of Russian oil and things like that. So it's been kind of a wild ride here. We don't have rollover next week. Rollover will be in 2 weeks, it looks like, on the 18th of the month on crude oil. What's the most important factor right now on the oil? I would say the range is one important factor. That's tough to ignore. Market, of course, starts off in a trading range, blasts up, and then do you see that pattern? Do you see that right there? Right? Blasts up. Range is the magnet. Buyers try once. Buyers try twice. Whatever could happen. What do you think could possibly happen after the buyers try twice like that? I love the trap off the high, right? All those stops just get lit up like a Christmas tree, right? So running those stops as they go back down. What was amazing is they ran it back down and did it again. 1, 2, right back up again. So some good examples there of what those two try reversals look like. Now, if this was a trending market, you wouldn't want to be that aggressive at calling those tops and bottoms, but there's a range in the middle. Ranges are notorious for that. It'll go up, right? 1, 2, right back down, slam lower, 1, 2, right back up. So anyways, rotation back and forth. What is also a very big clue here is the amount we go below the range is now the amount, or potentially the amount, we go above the range. Okay, that level is a big level on our radar here for tomorrow. On top of that, too, one more thing about the range, triangles. Okay, one thing about ranges, they love to use these expanding triangles. So we rotate back and forth. Remember, ranges love to rotate. And I like this area, right around that pendulum. It's right around the 110 round number. It'll make a lot of sense to get a lot of bears up here, trying to, sell into it. That's one very big part of this. I would say, too, another very big part, and it's not probably the most important part because the range is more important, I would say is the strength of this last move down. It's a very strong move. And we know in a lot of cases, strong move will result in a retest. Now, you can easily counter that by saying, well, what about this one, right? What about that one? You're absolutely right. You're absolutely right. So that's why I say it's probably not the most important clue, but why do I care about that? Well, here's why I care. Because if we get just above this prior high right now, I can start looking for entry short. I don't need to go all the way up around these highs. You know what I mean? If I have a lot of strength going lower and we haven't retested that low yet, we have to be looking for areas of resistance and then applying setups to sell it back down again, right? That's kind of the way it works. So that's definitely an important clue for me as well. Let's see here. One thing that stands out on this chart, and again, a lot of things are happening right now in the oil markets. We're seeing headlines every day about banning this or blocking that or embargoing that. Obviously, we're still seeing a lot of new updates coming out about this every day right now. But from what I can see right now, without any new information coming out right now, it doesn't look like it's going to be easy for these buyers unless they can really get something good going here. Obviously, buyers can buy off the low here, right? If they retest that low, that is an option. But, think about it. Going higher here, they've got a lot. They have to cover a lot of ground, and they have to hold up here. I could easily see sellers up here, right? Shorting off these highs over here. You can easily see sellers, right, coming up here and doing it again off of that high. the buyers have to get a move up, and they have to hold this and really show us. They've got to put some serious skin in the game up there at 111, 111.5, and that will put us up to that next level overhead at 113, 113.5 up there. That's where the next kind of big objective is as we go. So again, you'll probably never hear me say never, because you shouldn't even use that word as a trader. Anything is possible, especially with all the new information coming out right now. But it looks like from where we stand right now, be careful being a buyer as this market goes higher, unless something changes. Unless some news headlines comes out, some new information comes out, it'll happen overnight, and we can go forward from there. So there are a couple of setups here as we go higher, as we go lower. First of all, the bare minimum right now is this one, because again, you can see here at that next level of resistance and that big move down here. If I try to sell shallow pullbacks, right, what's my concern? My concern in this case is I'm right around that range. And so if you want to sell a shallow pullback, you want to think about a trap. Traps are always going to be your best bet whenever we try to sell a relatively shallow pullback. Now, if you think about this as just one big move like that, it's not a very shallow pullback. But when you put it in context with this trading range, it is a pretty shallow pullback. So let the buyers try twice, grab that trap, and that's a way to do it. That's a way to sell that, again, relatively shallow pullback. And the reason why I would do that is because of the strength of that move. They're trying to go back and retest that low. Now, as I go a little bit higher here now I don't need to be as choosy as far as the entry goes, right? As we come back up here, now I can go out, I can go one try, I can go two try, I can draw a trend line off that high, right? That will work at this point, because now we have all that open space overhead. There will be a trend line coming up here, so just kind of keep your eyes on that trend line. Make sure you're trading around that trend line. You'll learn that more in the video classes. But once those buyers try twice, now again, why twice here? Isn't this a bear market? It is a bear market, but again, it's a range. And so when it rotates up off the low of that range, it's a very good idea to use that two try rule and then think about where is the pain from there? Right? Find that trend line and then grab that signal, makes the signal close below moving average, and then grab it as it goes lower. Now remember, your job ain't over yet. At this point now, mark that low, mark that high, and what do we always say? First test is the best test. Traps, baby, off that high. Again, this could be a trap. I love traps, right? You could use trap. This could be a failure setup. Failures are probably more common than traps. They happen more often. Pullback combinations. And we've got one thing in mind at that point. We're trying to go back down and bury that 106.44 low at that point. Okay? Now, as we go higher here, if we go higher, I think you're wise to look for this setup where it goes up, 1, 2, trap and go. You're going to want to sell as high as you can if we go back to these highs here. So for example, you really want to be careful with something like this. If it goes up and then begins to pull back like this, like a 1, like a 2, you know what I mean? If this is the setup, you're going to be very worried about that short. Why? Because it's a very strong move higher at that point. And where do you think the buyers will be coming in? Yeah, they're going to buy low. And so a lot of times what will happen is on these really strong moves, again, right here, I'm not so worried about it right here, right? But as we go really popping up, remember, what's the key? It's a strong move. It's going to want to retest. Buyers are going to try to buy it as it pulls back. And so you've got to be aware of that situation here. This is a little more advanced tactic, but what you want to think about is something like this, right? I can go 1, 2, and I can sell like that. Like, that's fine because there's no buyers up there. You know what I'm saying, right? But if I have it go like this, where it goes 1 and then down from there, see, that's a very different story now. Now you're selling it right there, right? And again, you're selling it relatively low. These will oftentimes go one little bit lower, pop up, and then there's that trap, and there's all the pros, right? The pros are waiting right there going, I told you, right? I told you, watch those buyers coming in, buying that deeper pullback, right? Probably a channel down, you know what I'm saying? So this is a little more advanced tactic up here. So 1 would be a move up, 1, 2, little trap. Remember, the key here is when you have a lot of momentum against you and you're at a level of resistance, Be very aware. You want to sell as high as you can because that's your protection. Okay, that's your ability to get away from those buyers, right? By the time you get your first target down here, okay, by the time the buyers come back in, you've already got your money out of that thing, right? Now stops down a point of entry, and now it's all gravy. Okay, makes sense? And again, if it really starts to kind of dump and roll over here now you know, right? Now we're on. Now mark that low, mark that high, and again, grab that first test off the high of that channel, okay? Another way to do this would be we go up, they pull back, they retest that high, and now this is even easier, okay? Because now the buyers have already put their money in. Now they'll probably take their money out. Professionals will, right? Take some profit. Anybody who starts buying now, 1, 2, these are the weak hands. Okay, this is the dumb money who just sat down at the poker table who wants to learn to play poker today. You know what I mean? These are not the people who are moving these markets. They can't protect themselves. They're inexperienced traders. Unfortunately, this is the way trading works. The markets move money from inexperienced traders' pockets to more experienced traders' pockets. That's just the way it goes, right? Welcome to the party. The water's nice. Come on in. So we mark up those 2 tries up there. All the stops now, the weekend stops are sitting there now. And now, again, remember, strong move, but now they've retested the high. I don't need to be as choosy now. There's not as much potential for another leg higher there, right? So now, again, trend line's great, trap is great there, nice strong signal here, right? And we get that jump and that drop down, find that channel, and we go back down into that trading range. This could easily be a very, very good combination setup for us here tomorrow. Now, we mentioned earlier, right, as we go lower, we retest that low. We talked about this already, the 1, the 2, the go from here, right? We talked about that before on the NASDAQ. Where's last week's low? Last week's close. It looks lonely down there, doesn't it? Look at it, right? That last week's close, it looks a little lonely. That looks like a scowl. It looks a little lonely down there. It says, "Come on, guys, come play with me too. The S&P and the NASDAQ are having fun. Why can't we get involved?" Obviously, I'm having some fun with you here, but this is definitely very much on our radar for tomorrow. There is a paper napkin at 105.63. Right? This thing has almost zero chance. If this thing rolls over and goes, I mean, maybe you see a little bounce there, but and again, this is where that kind of pop and pullback would come in handy here. But I would imagine this thing rolls over. If we roll over without going up first, right? If we roll over and, I would imagine the last week's close will be very, very likely here for tomorrow. Remember though, it is a range. So it's going to be that 1, 2, 3 breakdown. Hold that pullback, find that channel, right? And then hit that first test. Where's the market want to go? Absolutely last week's close, right? Remember, strong pop off the moving average, hit that first test, okay? Or it rolls lower, grinds down. This is the easiest one because now you know what's going on. Rolls over, grinds down, draw that trend line, find that anchor, look for that pullback, hit that first test. Okay, keep an eye on that. Or like I mentioned before, right? Maybe it rolls over, takes out that paper napkin low, bounces with some profit taking. Now we come over, we find those, right? We find those. Oftentimes these will be some sort of channel here or channel here. Oftentimes what happens is it'll go something like this. So they'll kind of roll over like that and bounce up, and we'll use that low like that, up around that high. Remember, strong, right? Strong bear market at this point. Get those buyers to come in, take that bait. Big, strong move down, wants to retest. We're simply selling into those stops for that next leg lower. Keep your eyes on that last week's close. All right, guys? Love the game plan for tomorrow. We are not in the prediction business, right? We're in the reaction business. We've outlined our game plan for tomorrow. Now all we got to do is wait and see what we get. Remember, be careful overnight. Trading's like riding a bicycle. Don't force the bad stuff or don't force the slow markets overnight. You know what they're waiting for. They're waiting for that non-farm payroll number tomorrow morning at 8:30 Eastern time. And speaking of tomorrow morning, remember, our trade room opens up every morning, 8 o'clock Eastern time. It's a great place to learn and trade along with us, to make sure you're doing everything the right way the first time. We have a lot of fun together. You're going to love the video classes here today. If you're like me and you hate missing the best trades each day, or you're taking too many losses, you're making too many mental mistakes, you're going to love our trade room. You'll love our video classes. But first, grab the free trading course, learn the basics. I'll put all the links you guys need, the description of the YouTube video. Don't be afraid to call the office. I always love speaking with you guys and gals. So call the office if you have any questions. We can cover anything you need help with, getting the right brokerage account going, the computer, the charts, or taking advantage of our membership specials we have going on for the month of May. So keep in touch on that. Let me know what you like about the video or hate about the video in the comment section below. Give me a thumbs up. Hit that like if you enjoyed the content tonight, and you better subscribe before you X off here tonight. Guys, my name is Joseph. I don't see you tomorrow morning in the trade room. Have a fantastic evening. Have a fantastic day tomorrow. Kick some butt out there. Trade the plan we've outlined here tonight. And I'll see you guys back here same time, same place next week, and get a pretty busy week next week here as well. All right, guys? Be well. Be nice to each other. And you better be here tomorrow. All right, guys. Adios, amigos. Bye-bye for now.